When it comes to trading, the strategy usually isn't the problem, it's more so the psychology. And I said usually, meaning that the strategy maybe could be the problem. But what if you could steal my exact trading strategy instead of you doing all the testing and hard work? Would that make your life a little bit easier? Well, I've decided that I'm going to show you guys my current strategy that I am using in 2024. And this strategy is more so based for indices like US 30, NAS 100, and my personal favorite, the S&P 500. So if you are new to my channel, buckle up. Hit that subscribe button for me. I have a ton of useful videos that you guys can look over as well. And if you guys could like this video, every time that you like the video, it's basically showing Instagram that this video is useful and it should be pushed towards other people. And if you guys don't follow me on Instagram already, that's where I'm most active. My Instagram username is Colt_Mosdef, or there should be a link in the description where you guys can find me on Instagram. Now, without further ado, let's get into my computer and let's make some freaking money together. Step 1, I'm going to show you guys how I do a drop down analysis. Usually when I am trading, just so you guys have some context, indices that I'm trading are the S&P 500, NAS 100, and then US 30. US 30 is the most volatile, if you guys do not know. Then NAS 100 is the second most volatile. And thirdly is the S&P 500. That's why I kind of prefer it, because the technicals line up really well with the S&P 500, as well as the volatility isn't just super crazy. So when I'm trading at the market open, and with my time, I have it set to UTC 5. So I'm in alignment with the New York Stock Exchange. So at 9:30 a.m. EST, that's when the market open happens. And that's when we're going to see the biggest influx of volume coming to the market, and we're going to see the biggest moves. So if you guys look right here, I'm on the minute 15 time frame. Every candlestick is 15 minutes. And look right here. Right after this candle closes, it's the market open. We can see like the market pushes up. Then we really start to see the volume come in. So I like to trade and to find a setup within the first 30 minutes of the market open. So from 9:30 a.m. to 10 a.m. is when I really want to see one of my setups appear. And I'm going to show you guys in a second how I find my setups and everything like that. So usually what I'm doing is I'm going to the daily time frame. And actually, we're going to see probably a nice push up tomorrow, because today's, or pretty much yesterday, but still it's today, yesterday's previous daily candle, you guys can see, look at that candle right here, closed as a spinning top, more so a shooting star. If you guys watched my candlestick video that I posted recently, we have this, I'd call it a shooting star candle right here. And usually a term that I go by is wicks to the bottom, it's going to go up, wicks to the top, it's going to drop. So when we see wicks to the bottom like this pointing down, usually the market's going to reverse and go the other way. Also, we can kind of look at this as a higher low. So we have this higher high, then price forms this higher low. Now what I'm looking for is price to make a new higher high. So that's what I'm looking for. So usually what I'm doing is I'm going on the daily time frame and I'm looking at the previous candle or candles. Now, one thing that you guys need to keep in mind with indices is they're known to always be in an uptrend. So your overall bias when you are trading indices, you're going to be looking for buys most all the time. So step 1, I'm looking at the higher time frames and looking and getting an overall bias on the previous candle or the previous candles. So at this point in time, I'm looking for buys. I'm looking for buys all day long, but what I need to see is my setup occur on a lower time frame like the minute 15 or the minute 5. But we're going to really bring our attention to the minute 15 time frame, because this is when the clearest setups are going to occur. Now, the next thing that I would recommend that you guys do is go to indicators. And I want you guys to get this one indicator. If you type in Asia, get the Asia range and kill zones right here. Once you add that to your chart, you can go to the settings on it. And all I'm focused on is the Asia range color right here. You can go and make it whatever color you would like. Now you guys can see I have my Asia range right here. Now overall, what I'm looking for is I want to see price within this Asia range have a very small move, if not any move. I kind of want it to consolidate. So throughout this Asia range, look how price kind of push ups, comes down, push ups, comes down, and it really doesn't do anything. The London session comes out here and it starts to like kind of push up. It's just overall, the market is forming these little higher highs and higher lows, higher highs and higher lows. So we want to see really small moves and really small candles, because if we see a bunch of small candles, that's really telling us that the market is holding back its volume for the market open. And look, right after this candle closes, we see the market come out right at the market open. It does a false breakout, and I'm going to explain where your entry is going to be, and then it pushes up. So realistically, when I'm trading, I've been using fair value gaps a lot, and they have been very helpful. So the way that I look for my fair value gaps is ideally I'm doing this. I'm looking for price to have these digs. I want price to like dig deep, and then I want to look to the left. So basically a fair value gap is a 3 candlestick pattern. I want to see one big candle push up, and then I want to see a candle before it, and then a candle after it have a really big gap. So I'm looking at the high of this candle. This is a bullish fair value gap. I'm looking at the high of this candle right here, and then I'm looking at the low of this candle right here. So for the first candle, I'm looking at the high, and I want to see this candle in the middle be kind of big, so I have a gap in between, and then I want to get the low of this candle. Once I get that, I'm literally looking for that dig like I said, and then I'm looking to the left. That's why I kind of like using the cross, because if I go right here, boom, look at the alignment right here and here. So watch, when I grab this rectangle right here, I'm going to go from the candle's high to this candle's low, and then I'm going to extend into the future. Okay? And usually what I want to see is price come down and hit this and then push away. So we can see that this is a fair value gap right here, but price dug into it right here, but we want it to really go and hit that fair value gap perfectly, and it didn't right there. So this wouldn't be a valid fair value gap for that time. We could just drag that one right there.
Yo, if you guys are looking to scale your trading business and you want to get to the next level, whether you're just starting out or you already have some experience in the trading industry, you need to join us at Reward Over Risk. We have a bunch of programs like one-on-one mentorship, where I actually have a 10-day class where I show you my exact strategies. We have live trading sessions where we get on Zoom calls and trade together as a community. And we also have trading softwares that can trade 100% hands-free for you. We have everything that you need to take over to your trading this year and the following years. But the only way for you to apply for this is to click the link in the description and book a phone call. Once again, click the link in the description, book a phone call, and let's see if you're a good fit to be a part of our community. Talk soon.
Now, look, we can see another fair value gap. We have this big candle right here. We're going to go from the previous candle's low, first candle, to the third candle's high, extend into the future, and then look how price does that. Price pushes higher, forms this fair value gap, comes back in it, then right at the market open, look how it digs in here. We can look for buys. So usually with these fair value gaps, I'm looking for buys when it hits the top of the fair value gap or the bottom. Now what you could do as well is you can get your fibs, and you can go from the high to the low, and then you can get a horizontal line right at the 50% level right here, drag it right there, delete the fibs, and now this 50% level where this blue line is, that can also be an entry level. So with me, I like to just enter at the high or the low, whatever one it hits. So if it hits a high, I'm going to enter buy. If it hits a low, I'm also going to enter buy. So hypothetically, let's pretend that the market open was right here. We're looking at the market like this, and we could see price hit it. We could be looking to go long right here, and then we could have our stops right below this low right here. I like to have my stops a little bit big, but if you want, you could even have it right below here so it's not too big, right below here. And then for our TP, we're going to be looking for previous highs. So that's where I'm going to go to a higher time frame. Now look, if I'm at all-time highs like I am right here, and I'm stuck. I'm like, oh my gosh, where am I going to put my TP? I'm simply going to grab the fibs like this. I'm going to get the fibs from my previous low. So let me delete this real quick so I have some room to see. So I'm going to grab my fibs. Let's retry that. I'm going to get my fibs from this previous low to this high. And then my TP is going to be at the -50 level right here. Now this isn't a good trade because it's not a positive risk to reward ratio. So that means my stop loss is too big. So I'm going to bring my stops in right below here at this wick. And now this trade looks good. So we can play it back now. Once price digs in there again, we can enter another position. And then once I'm in this trade, let me go back so I can show you guys some more sauce, because this is going to be really helpful. So once I have my trade set up, I'm doing two very important things. First off, I'm going to this alert button right here and I'm making an alert. Now I can't do it right now, but I'll show you in a second. That's first. But also what I'm doing is I'm getting my fibs from this entry level, wherever I entered my price at, and then I'm putting out my TP. And once again, I'm getting that 50% level right here. Delete the fibs. Now once price goes here, take off 50%. So once price mitigates to this level right here, I'm going to take 50% of my position off, close 50% of my profit. And then what I'm also going to do is trail my stop loss to my entry. So let's say that this is our final trade. We have it set up. And what you want to see, if you know that it's a valid fair value gap, is you want to see price hit it and move away very, very, very quickly. It's like a trampoline. It like jumps up, price comes back down to hit it, and then moves away. Digs in here, pushes away very heavily, hits our 50% level. We're taking off 50% of our trade, trailing our stops to entry, letting the rest ride out. TP hit right here. So this is overall what I'm looking for when it comes to setups. Let me show you guys how I would set up an alert. So let's go back to present time. Ideally, let's say that I'm looking for a buy back here. Let's say I was going for a buy right here. Boom, I'm going to just put some stuff right here. Now my stop loss is 51.04. My take profit is 51.36. Once I have my trade set up and I'm in real time, I'm going right here and I'm putting 51.36. And I'm going right here and putting TP hit. Create. Then I'm going to get the alert again. Stop loss 51.04. Stop loss hit. Create. And I can drag this if I want to put it on even more accurately. Just like that. So now I have these alerts set. So instead of me staring at my charts all day, I can put my alerts notify me when my take profit or stop loss is hit, and vice versa for my halfway point. I'll drag this, get my 50% level right here, delete this. Now my 50% level is at 51.24. And I'll usually put take off 50%. So once price goes and hits that level, I know, okay, I need to take off 50% of my position and I need to trail my stop loss to my entry. And I can even drag this stop loss too. So then I know if my entry stop loss is hit. This is like my strategy, guys. It seems very simple, but it is going to take some time to adjust to it. If you guys do want to do some more research on like fair value gaps and stuff like that, definitely look at it. I have videos that will help you guys out as well. Definitely dissect a lot of my content, guys. I have a ton of videos that will really help you guys out. And if you want to trade live with me or you want my one-on-one mentorship, click the link in my description. Send me a message on Instagram. Say that you want to book a call or you want to inquire about my one-on-one mentorship, and we'll go from there. Without further ado, guys, I'll see you later. Peace.
Not a lot of people made it to the end of the video, but you did. Make sure you share this video with a friend. Also, comment below. I want to know who you guys are and how I can help you guys out with your trading. And if you're not subscribed to my channel, hit that subscribe button. I'm dropping weekly videos every single week on trading to help you guys out. Look forward to seeing you guys soon.